This is episode number 2 of the last chapter. Let's do it! What's up, everybody out there in listener land? This is the Real Dealz podcast, and I am your host, Tucker Merrihew. What's up, everybody? I'm stoked. I'm happy. I'm ready to get back on the microphone, as I said in the first episode of this kind of last chapter, and I'm excited, man. I'm excited. And we've got some changes coming up, too. This is an audio show, as you'll obviously hear, but we're going to have some video shows as well. We'll strip the audio out. Of course, it'll roll like the normal audio shows normally do, but we'll also have video up on YouTube in case you want to watch it that way as well. So pretty excited about that. Some big changes coming. I'm getting the studio kind of perfected here, but in the meantime, I didn't want to let that kind of delay getting this show out. All right, so I've got a great show for you guys today. I'm going to get into some really cool stuff. Before I do, though, I just wanted to kind of make mention to something that's been going on over the last, I don't know, we'll call it week and a half here, 2 weeks. There was a nasty ice, snow, windstorm in the Portland area over the past couple of weeks. Obviously, I'm not in Portland. I'm in Naples. I do have a house in Portland. And so, I've been very attentive to what's been going on. There's power outage for over a week, all kinds of other stuff, unfortunate stuff. But it's been interesting to watch because there was like 100+ trees down in the city of Lake Oswego. There was probably way more than that, honestly, but there was 100+ trees down, and a good chunk of those actually fell into people's houses. Imagine that, right? For many of you guys that have listened to me for years and years and years, you probably have seen all of the battles that we fought over trying to cut trees whenever it is that we were redeveloping infill lots. Trying to get rid of trees that ultimately would be a hazard to the homeowners that bought our houses. In addition to just kind of removing trees that should be removed if you're going to redevelop any sort of an infill lot. But the city had such a stringent policy on tree removal for so long that it caused a lot of trees that should have been removed to not be removed. And now, in the midst of this nasty storm that came through, they had a whole bunch of them that went through people's houses. A couple people actually died. It just was terrible. So now you've got all these people that, of all those trees that fell into houses, there were a percentage of those people that actually tried to get these trees removed themselves, not just a builder like me, but actual homeowner, and they were denied. And now those trees fell through their houses, caused all kinds of havoc on their lives and a bunch of other stuff. And so a lot of those people are lawyering up to kind of go after the city. It's going to be a real mess. And obviously I don't wish that kind of mess on anybody, but it's just things are kind of finally coming full circle there, hopefully, in terms of, the fight that I was fighting for years. And what I said on this show, and anybody that would listen, is that the tree code is insane and these people are out of their damn minds. And, now the chickens are coming home to roost. So we'll see how that shakes out. My heart goes out to everybody that, had trees to their houses and had damage and, life loss and all that stuff. It's terrible. But I was trying to fight that fight for years, people, and nobody would listen. So anyway, I just wanted to bring that up before we dive into the rest of the show. One other thing I want to mention is if any of you guys out there in listener land are interested in coming and visiting Naples, which, it's 84 degrees and sunny today. It's a beautiful day. I'm going to head out to the job sites after I record this. You can feel free to reach out to us. I've got a number of vacation rentals. Most of them are booked during season, but off season, we've got some openings still. And so if you want to come stay in Naples and you want to stay in our brand here is TTM Luxury Rentals, we have, the best houses in the best areas for anybody that's trying to vacation. So if you're interested in that, feel free to reach out to us, and I can send you the links to the houses. So that is my intro. I've got a really good show for you guys. We've got new format, and we're going to get into that. But basically, I've got a couple of segments. One is going to be about teaching. One is going to be about throwing a little bit of shade just on the industry as a whole, because, I don't know, you guys like to hear that, and I obviously have a lot to say about it. And then we're going to wrap up the show after that. So they're going to be about 30-minute shows. I'm going to try and get as much as I can into about 30 minutes, because who the hell wants to listen to a podcast for more than 30 minutes these days, right? Even me, right? So I'm going to try and do the best that I can to deliver you guys everything that you need to know, or that I have to say anyway, in 30 minutes-ish, something like that. So let's get into it. All right, so 2023 was the worst year for housing sales since 1995. So let that soak in real quick. What does that mean exactly? Well, there were less people in 95, which means there were less overall transactions, but there was actually less transactions in 2023 than in 1995. So it's not even apples to apples. It's probably significantly worse than 1995 if you account for just the overall number of housing units and population. But from a data perspective, that's the headline that you're going to read. So what does that mean, right? Well, that just means there were that few of transactions in terms of real estate changing hands, which means it was difficult to sell property, right? Not a whole lot of people were looking to buy real estate in 2023. And so now as we head into 2024, I don't want to dwell on the rear view because we all know what 2023 was. 2024, what's going to happen, right? How are we going to plan? Can we plan? I mean, my crystal ball is a little foggy, I'll be totally honest with you, but I'm trying to look at the things that make up the market, right? What it is that actually drives the market. Now, of course, there's supply and demand. Supply and demand it's an interesting thing right now, and I'll get into that in a minute. But the other thing, obviously, is mortgage rates, right? As mortgage rates started to rise, in 2022 into 2023, it was almost like they didn't have too much of an impact on the market until they got to a certain point. And then once they got to a certain point, it just broke the back of the market almost overnight. And that point was, once they kind of crossed into, 6 3/4 and above, things just tapered really quickly, and not in a good way. So right now, rates have come back down. They've kind of bounced back up. They got as low as about 6 3/4. They're up to somewhere about 6.9 or something like that when I looked today, 6.92. Depending on who you get quotes from, whatever, but that's just kind of a general metric to kind of follow. So they've been going up a little bit this week. Everybody's kind of saying, rates are going to keep coming down this year, and maybe they will. Maybe they won't. I don't know. I can't predict that, but I just want to kind of give you guys some, if they do, here's what'll probably happen. If they don't, here's what'll probably happen, right? And so the other thing at play is, the Fed, everybody's expecting the Fed to cut rates. Well, if you read the most recent articles on that, the Fed rate cut in March, as of right now, because that would be the first time that they could cut, the rate cut in March, 60% of economists are saying no, and 40% are saying yes. A month ago or so, it was probably, the reverse of that, if not even more. So, my thoughts, right? Well, if you look at the stock market, the Dow's at all-time highs right now. What happens if they start cutting rates, right, going into that? And it doesn't feel like it should be at all-time highs right now, but it is. So I feel like that's a little out of whack. So maybe that'll be a factor in what it is that ultimately they do. But then again, it's an election year, so who the hell knows, right? So there's that. But why does all this matter, right? At the end of the day, you can look at all these things and, they're going to be what they're going to be. But why does it matter? And at the end of the day, it really comes down to the confidence that the home buyer has in the housing market, right? That's really what is the governor on their desire to buy homes. Now, people that have a home and they want to trade up or trade down or just trade, across the board, interest rates have something to do with that as well, because if they have a good mortgage now with 2, 3, 4% rate, they don't want to trade that out for 6 3/4, 7% rate, whatever it is. So that's going to have a little bit of a be a factor there. But the other thing is just nobody wants to be the idiot, right? The village idiot that buys and pays too much. And although many of you listening and myself as real estate professionals, generally you want to buy when everybody else is not. That's when you're going to get your best deals. The general public does not operate that way. Most of the general public, retail, home buyers, they operate in the sense that, if they feel like they're buying at a good time, as in the market is, good, then they buy like crazy, right? Or they start buying and then they buy more and they buy more, and that's how you kind of get into these cycles. But when the market's bad, they do what we don't, right? They don't buy when we as investors should be looking to buy. And so really what we need is kind of the end of the tunnel, right? We need to be able to see the end of the tunnel. We need to be able to see, okay, rates are going to continue to come down. The projections for where they're going to be is real. The Fed is going to cut rates. We're kind of going to get back to whatever that normal Fed funds rate is and where the normal interest rates are going to kind of settle, right? Because they've just been on a roller coaster ride the last few years. And so once we get to the point where we can see the end of the tunnel, I think, sales will kind of pick up and buyers will have a little more confidence that they're not going to be the village idiot. And that's going to kind of be the turning point in the market. Now, are we there yet? I don't think so. I really don't. But it depends on what you're looking at, what product type, what part of the market. We're very splintered right now. I'll give you, the tale of two different scenarios. We have a new construction house here in Naples. It's at the higher end price range of a neighborhood, and it's not selling right now, not because it's not a great house, not a great location, but because that buyer is apprehensive about values, right? Which understandably so. But then on the flip side, we have my own house that I kept in Lake Oswego that we're currently in the process of selling. I sold that with a text message, and I sold it for a number that, I think is a very fair number, probably on the slightly on the aggressive side in terms of, historically what it's been worth. So, if you look at those and compare them, you'd say, okay, well, one of them felt like it was a super easy sale, something that literally sold in a text message. It felt like I was selling it in, on the tail end of Rona when, things were just bananas. But then the other one, we're having a hard time getting enough traffic to sell it just because the absorption rate in that particular area is very, very low. So the market is incredibly splintered right now. So, if I say some of these things, you might be like, oh, my market's great. I'm selling stuff, no problem. And other people are saying I can't sell shit, right? Well, it just depends. It depends on your product type. It depends on your price point. It depends on your area. Some areas have a significant amount of inventory and aren't absorbing at all. Other ones have, 2-3 months of inventory at best, and they're absorbing pretty well, at least on the resale housing, not on the new construction stuff. New construction is definitely taking a little longer on the infill levels in most places because of the fact that it's going to be the highest price point in any given neighborhood, and that's always going to be difficult in a market like this. So we're in a splintered market. At what point it kind of comes together and it's running kind of parallel, and you don't have two different markets going on, I don't know. At least probably halfway through this year, that's going to be my guess. And so at that point, you might get more buyer activity, significant more retail buyer activity coming back in the market. But we're not there yet in Naples, that's for sure. And it's definitely slow in a lot of price ranges and areas back in the Northwest as well. The house that I have there just happens to be one of those houses that's not. So anyway, that's my take on what's going on with the market. Hopefully it kind of sheds a little bit of light, for you guys, maybe gives you some ideas, some things to think about as you're kind of moving forward. But that is how I see it at the moment. And, I think that we got at least until halfway through this year before I can kind of rejigger which way things are going to go, or at least guesstimate which ways are going to go, or which way things are going to go in a kind of educated manner. Right now, I'm just kind of, monkey with a, blindfold throwing darts at the board. But those are the things that play, and those are the things that ultimately are going to dictate which way the market goes. Okay, this is the segment that most of you are probably waiting for me to talk some shit, right? Well, this week I'm not going to call out any particular person by name, and I don't know, it's probably in bad taste to do that, honestly, but I can describe scenarios, people, things, messages, all that kind of stuff. But I'll be honest, there was it's not a single thing, but I've seen a lot of this going on in our industry. And I have to say something about it, because ultimately I know why they do it. I want to kind of pull back the curtain on why this message gets pushed out there to everybody in this industry. But then I also want to kind of break it down and just tell you why I just think it sucks. I don't like it. I understand its purpose, but I don't like it. So, first I want to talk about, and you guys have probably seen this, there's a lot of people, guru types that push like, make 10K in the next 30 days, or, make 50 grand from a rehab, which sounds great, right? But I really want you guys to understand that, the make 10K in 30 days thing is really just it's a hook, right? It's a hook because it sounds attainable to the person that has nothing, right? Has done nothing in this business so far, and you got to give people a stair step to kind of get into things. And so that's your biggest customer base when you're trying to sell some sort of product, coaching, whatever it is, right? Make 10K in 30 days, $10,000 challenge or 30-day challenge, whatever it is. And so that's fine because you got to start somewhere. Totally get it. What really bothers me is the continued mantra of that from some gurus where that's the only drum that they beat, right? They just beat that drum over and over and over and over again as if that is the road to prosperity for this business overall. And it's not. It's the road to prosperity for them to fish in the biggest pond of potential customers, which, again, I get. They're running an information business. If you're going to run one of those, you got to fish the biggest pond. That's how you make the most money, right? But from an actual messaging standpoint, I don't like it because that's where you start. That's where you should start, right? They're basically saying, you get into this business, you do 10K in 30 days, and then you turn into a high volume wholesaler, right? That's kind of the maturation process that they like to run you through. Like, I did 100 deals last year, or, I did, 50 rehabs or 60 rehabs, or we have like 30 rehabs going at any given point, and we make like, 40 to 50 grand a rehab. I mean, I don't know about you. Well, I don't know about you, but for me, just shoot me. I don't want to do that anymore, right? I've done it. And I made a comment this week, on a good friend's post that, he kind of came to the same epiphany. He was running a big business with a lot of moving parts and a lot of volume for many years. And then he got into land development, and he made more money in one land development deal than he did running this high friction, high volume house flipping wholesaling business. The previous, 6 or 7 years, he made more money, in 1 year compared to any 1 year of operating the other business this past year. And it was like a light bulb came on in his head. And I think that is the thing, or the message that I really want to get across here, is like, you got to start somewhere, but don't glorify that business of, how many deals did you do, whether it be wholesaling, whether it be rehabbing, because there's a lot of friction. There's a lot of brain damage that goes into that. And ultimately, if you run a high volume business for a sustained amount of time, it's going to eat some of your soul. It just does, because this is real estate. There's so many people you got to deal with. There's so many friction points that, the more transactions you layer on top, the more friction points there are. And the more friction points there are, the more stress there is. And the more transactions you do, the more rehabs you're holding at any given time, the more capital outlay you have, the more, investor obligations you have, the more interest you're paying. There's just, you can say that stuff doesn't affect you. And to a point, you got to get good at not letting it affect you. But it does create stress in your life and overall quality of life. And so there's seasons to life. There's times to do that. If you're trying to level up and get to the next level, and you have to do that before you kind of grow into the next phase of whatever your business is, by all means do it. I did it, but I got the hell out of that lane as quickly as I could once I realized that that's not the motherland, right? That's not the place that the destination that you want to get to. The destination you want to get to is you want to get through that. Okay, I learned to wholesale. I learned to find deals. Then I started rehabbing, started doing a lot of rehabs because I wanted to make more money, but I was doing, entry-level price point rehabs, reselling them. You can only make so much money doing that. Once you figure out that it's the same amount of work to do those rehabs as it is to do ones where you make, 3, 4, 5, 6 times the money, then you're like, oh, shit, maybe I should kind of pivot a little bit, maybe raise a little bit more money, do less deals, do better properties in better areas, and ultimately make more money and have less friction. You just start to learn, right? And so, as long as you're learning and you're kind of figuring out, okay, what it is that you ultimately want to do, because that, like I said, that's a temporary place. That's purgatory. You should not stay there. And, remember when the whole scaling was like this huge thing? They had this giant conference and they were like, whole scaling. And I don't know, you Texas guys, I like some of you guys a lot in Texas, but man, Texas is like the mecca for, dumb shit sometimes. And, I think that was the epicenter of the whole scaling thing. And maybe some of the Phoenix crew too. There's some interesting characters there as well. But remember there was one guy, I forget his name, but he was very eccentric and wore skinny jeans and had crazy hair, and he was supposedly like the king of this industry. Well, where's he at now, right? I think he's got lawsuits against him for, stealing people's money, other things. He's definitely not doing real estate. I know he was trying to pitch like e-commerce stores and shit like that as soon as real estate kind of went down a little bit. So, where are these people that were pitching that now, right? Do they have actual real estate businesses that are still cranking? Have they pivoted? Are they actually doing that they were trying to sell you on? So just keep that in mind, right? You got to get into this business. You got to start somewhere. You got to start by learning how to find off-market deals. You got to then kind of grow into doing more of those, so you kind of get more experience, you make some more money. Then maybe you get into a different aspect of it so that you can make, not just, smaller transactional money, but bigger transactional money. And then you kind of go from there, right? So, for us, we just kind of continued to climb the ladder, and we went bigger and bigger project-wise. Some guys spin off, they go into multifamily. Some guys go into self-storage. Some guys go into syndication, and buy huge, multifamily complexes, all kinds of stuff like that. For us, our ladder is, high dollar single family, and that's where we're going. But, none of those, scenarios that I just kind of went through, none of those guys stay in high volume rehabbing, high volume wholesaling for a long period of time. It's a necessary means to get to the next level a lot of times, but that's not where you want to be indefinitely. So when people glorify that, just understand that that's just a sales pitch, right? And at the end of the day, if their business, their personal real estate business has not advanced beyond that, then they're selling information, and that's their main business. So, and again, it's not a knock on selling coaching and information. It's just, that's the reality. That's what it looks like behind the curtain. And that's what I wanted you guys to know this week. So, don't glorify that. I did 100 deals. How many deals do you have going on? I got 40 rehabs. That sounds like shit. I'd want to shoot myself, right? And, if you're married, you're probably barely married. And everybody's probably at the end of their rope. And, I've been there. I know what that's like. I know what the stresses those cause. I know what it takes from you mentally. I know what it takes capital-wise. And it's a lot. And, sometimes you wake up certain days and you're like, how did I get here? And what kind of business is this I'm running? And I don't even like this, but I'm here and I'm in too deep, so I got to keep going. And now that I have a little perspective, having unwound a business and restarted a business and kind of changed, the business over the years, hopefully I can kind of give you guys some of that perspective. So that's my shade for this week. Hopefully you guys got something out of it, but I feel like it's an important message. All right, as we kind of wrap up these new episodes, I want to take a minute just to kind of, highlight people that I've met on this journey, because I'm talking some shit in this episode, and I'll continue to talk shit because that's just kind of what I do. But on the flip side, I want to actually, kind of tell you guys who the good guys are in this business, people that I've known now for, a long time. We're not just talking like a year or two. Like, I've known these people for, 10 plus years in this industry. And, I've seen them grow up. I've seen them do some amazing things. I know who they are to their core. And, I just want to highlight some of these people. So every episode, I'm going to highlight somebody. They don't even know I'm highlighting them. I don't have like an affiliate link or anything like that I'm pushing you guys to. I just, kind of giving you guys some additional information. And maybe some of these guys are quality guys and gals. But maybe you don't. And if you run across them, you can at least know that, they definitely have, my praise in terms of just being a quality individual, and just anything that they've touched in the real estate world has been, of substance, and it's been something really good. So, honestly, a lot of these people are DFA members from our mastermind group, or legacy DFA members that, have been in it for, 10 plus years, and, are just really good friends at this point. And so I just want to highlight these people. But the first one that I want to highlight this week, a good friend of mine, Mr. Justin Silverio. If any of you guys, know Justin, that he's a great guy. He's been on the show a few times. We've been in business together. We did some coaching together. But he's got two great companies, Open Letter Marketing and Invelo, which is a CRM that has all kinds of other capabilities as well. But he's gone on, he's built some pretty amazing things in this business, and it's just been really cool to see that. So he's one of the good guys for sure. He's got some great product offerings, and if you don't know Justin, I suggest you reach out to him, get to know him, and get to know his team if you need any of those services. But great dude, and we've been friends for a long time now, and I got nothing but good things to say about him. So that's my good guy of the week. Before I wrap up, I will say this. We are looking at this point to raise some additional private money. Now that we're in Naples here, we kind of got our feet under us. We got our sub base. We're building our own houses. We're our own GC here in Florida, just like we were in Oregon. We've, built a number of houses. We've renovated a number of houses. We have our rental portfolio, that we've built out. We're going to continue building it. I'll talk about that in a future episode. But we've kind of got our feet under us, right? We've We understand the dynamics of the neighborhood. We understand the pricing roller coaster. We understand the sub difficulties, the pricing difficulties with subcontractors, and just with the huge price disparity in this market, where you could be selling something for $50 million and you could be selling something for $650,000. That creates challenges on the sub level, and so. We've kind of figured all that out, not completely, but I would say we've got a good handle on it now. It took us, a couple years to do it, and so I wanted to get to this point before we start raising money. So if any of you guys out there in listener land, you're looking to put some money to work, for a while we were looking to start a fund, and maybe we do moving forward, but I really like working with investors individually, project by project, so one investor, one project, as much as we can. It just creates for a better relationship, and they feel like they have some ownership in what we're doing, and they know where the money is, and it's always worked out really well. So we had some great money partners back in the Northwest. Unfortunately, they don't want to migrate their money all the way over here, which I understand, because they like to drive by our projects, check them out, and make it real to themselves. So totally get it. And a lot of them are kind of at the tail end of their let's call it last chapter of their lives, and so they're just trying to simplify things. So we're trying to build some new relationships. So any of you guys listening, if you're interested, reach out to us, info@therealdealspodcast.com, and we can start a conversation about it. But like I said, we're looking to create some new money partners here so that we can do some great projects here in Naples, and we can do what we've always done, which is build and renovate great houses and sell them for a lot of money. So reach out to us. We'd love to hear from you. Other than that, that's this week's episode, guys. I tried to keep it as short as I could and pack as much punch into the 30-ish minutes that I could, but I will see you guys on the next one.